Oracle beat on the bottom, right? They beat by about 1%. They missed on revenue by 0.21%. Is that a hitting expectations or missing? And let's also remind people that expectations are Wall Street expectations, not the guide, right? But with all that financial mumbo jumbo said, their IaaS growth is on fire. 57% growth, constant currency. They're nearing a $6 billion run rate business. That's incredible. SaaS growth of 44% constant currency. That's nearly a $12 billion business. Here was a big surprise, Daniel. I had ERP SaaS, which we have seen overall enterprise SaaS decline when you looked at the quarter before with Salesforce and a couple other companies, but they keep knocking it with big double-digit numbers in the 20s, right? And then I think it's hard. I think we should no longer look at SaaS as this homogenous glob. I mean, we have to parse it out. ERP changes are based on the changing calculus in supply chain is keeping ERP SaaS growing. And in fact, 28% growth for Fusion, 26% growth for NetSuite. Listen to the call, and there were some pretty fun stuff. I mean, anytime that Safa or Larry get on the phone, you're gonna get some fireworks. But they had customer lists, right? There's 10,000 Fusion ERP customers, 34,000 NetSuite ERP customers. Cerner, right? Big acquisition they made. They've increased their healthcare contract base by $5 billion since they acquired the company. A little smack talking here. They were talking about Austin FC and quote unquote, Austin FC sidelined AWS and Snowflake and chose Oracle Cloud Infrastructure. That was fun. I think the final Larry smack talk that came out was quote unquote, my favorite quote from big phone company United States was, the difference between Oracle Cloud and other clouds are simply that Oracle Cloud doesn't go down. Man, that's a slippery slope, if you ask me. But I'm sure if that not going down continues in the future, we're going to start, hearing about it a lot more, and we'll probably hear their IaaS competitors potentially talking smack back.
Yeah. So Pat, look, the stock fell on a $20 million miss on over $12 billion in revenue on top line. It's like a rounding error. I mean, like a point, 0.01 move of currency could have changed that in a moment's notice. But like I said, yes, this week's it's more the macro, and everybody's feeling bad again this week. Okay, and so we got to be more prescriptive here. 55+% growth of IaaS, 45% overall cloud growth, $16 billion run, 42% on the apps business, Pat. Now, again, all these numbers are significantly higher than the biggest in these categories. You're growing faster in apps than Salesforce. You're growing faster in infrastructure than AWS. We got to call a spade a spade. That's our job as analysts. We got to call it a spade a spade. The company is growing well. And it has a really interesting juxtaposition because of its huge database business. And this database business is like fire and gasoline for growing its cloud business, because it's very easy for them to say, look, we're going to make it worth your while to run your data in our cloud. And so I don't even think the company's fully turned the screw in terms of that. And so this is going to be something that's really interesting to continue to watch. The other thing is, just like I said about MongoDB, the plumbing here is really interesting. Oracle has probably the largest system of record and data set of enterprises in the world. I think SAP and Oracle are probably the two that have the most data under, in terms of system of record data. And all that data is going to create a really interesting long-term opportunity for Oracle to step into this generative AI arms race, because we all know how expensive it is to move data. So it's kind of a, hey, you got all this data on Oracle, you run it all in Oracle Cloud, and we start building generative and AI models that are going to be beneficial. That becomes a really powerful combination long-term to look at. I still think enterprise AI is the biggest opportunity, not actually this sort of open internet AI that everybody's so excited about.
Yeah.
We're really just kind of witnessing Siri 2.0 right now. This is like the next Siri that works a little bit better. That's really what we're kind of seeing right now. But how this gets applied on our proprietary data is going to be the interesting output. So they raised the div. The guidance is good. The growth is good. Oracle's good. I like the company. I'm in the middle of working on another op-ed for Market Watch of 4 companies I think are really interesting to keep an eye on during this sort of austerity period. Oracle is among them for all the reasons that we mentioned. Congratulations to the company. It's going to be fierce for them to ever climb into being, out of the 3-4 race, because there's just so much growth to catch up with Microsoft and AWS. But Larry's confidence, it can't be shaken.
And yeah, I mean, who would have thought? I mean, look back 3 years ago. I mean, their IaaS was just terrible, right? And they were, getting to Redwood with Fusion. I mean, NetSuite was still growing, but you had a bunch of uncoordinated code bases on the SaaS side. So credit to them, seriously, credit to them.